In 2023, the United States spent $6.1 trillion. That's not revenue, that's spending. For comparison, Apple, the most valuable company in the world, made $383 billion. One government, 1 year, spending 16 times more than Apple earns. That number alone should feel uncomfortable, because economics exists to explain why that number doesn't immediately collapse everything. But this wasn't the real problem. The real question is simpler. Why do countries keep spending money they don't have? And why does the system allow it? That's where economics begins. Economics exists because resources are limited. Time is limited. Money is limited. Land is limited. Attention is limited. But human wants, famously, unlimited. Every economic decision is really a trade-off. If the U.S. spends $800 billion on defense, that's $800 billion not spent on healthcare. If Amazon invests $90 billion in logistics, that's $90 billion not paid as profit. Economics isn't about money. It's about choices under pressure, and those pressures shape companies, countries, and people. But this idea didn't start in boardrooms. It started with survival. Thousands of years ago, there were no dollars, no banks, no credit cards, only food. If one village had grain and another had fish, they traded. But trade had a flaw. What if the fish rotted before the grain arrived? So money quietly appeared, not as wealth, but as trust. Gold, silver, eventually paper. Economics evolved to answer one question: who gets what and why? That question never changed, only the scale did. Scarcity is the villain of every economic story. There are never enough resources to satisfy everyone. That's true for a student choosing time between study and work, a company choosing growth versus profit, a country choosing welfare versus defense. Famously, Blockbuster ignored this. They had stores, they had customers, they had cash, but they misallocated attention. Netflix invested in servers. Blockbuster invested in late fees. Same market, same customers, different economic choices. That decision would change everything. Microeconomics studies individual players, people, firms, prices. Why does Starbucks charge $6 for coffee when the beans cost 30 cents? Because people aren't buying coffee, they're buying convenience, branding, and habit. Apple sells phones at 40% margins. Android phones sell at 5 to 10%. Same function, different perceived value. Microeconomics explains why Uber raises prices during rain, why Nike limits sneaker supply, why luxury brands destroy unsold inventory. Scarcity, again, quietly doing the work. But companies don't operate alone. They exist inside systems. That's where things get complicated. Macroeconomics looks at the entire economy. Inflation, unemployment, growth, debt. Japan has 250% debt to GDP. The U.S. has over 120%, yet both still function. Why? Because debt isn't bad. Uncontrolled debt is. Argentina printed money to pay bills. Inflation hit 140%. Canada raised interest rates. Inflation slowed. Same problem, different economic responses. Macroeconomics isn't morality, it's consequences. Money doesn't represent value, it represents confidence. When the Federal Reserve prints money, it's not creating wealth, it's creating liquidity. During COVID, the U.S. injected $5 trillion. Stocks soared, housing surged, wages briefly lagged. This wasn't generosity, it was economic triage, and that decision would quietly reshape inequality. Economics is political, but not partisan. China controls industries through the state. The U.S. controls behavior through markets. Europe regulates. India subsidizes. Different systems. Same objective. Stability. When Facebook changed its algorithm, entire media companies collapsed. No law passed, no election held, just incentives shifting. That's economics in real time. Incentives drive behavior. Tax credits created Tesla. Low interest rates created tech bubbles. High fuel prices created electric cars. Famously, when Netflix removed late fees, customer retention jumped. People respond to incentives, not instructions. That's why economics predicts behavior better than speeches. Every economic win creates a new problem. Cheap loans built startups. They also built bubbles. Globalization reduced prices. It also erased local jobs. Amazon made shopping efficient. It also reshaped cities. Economics never ends. It only shifts pressure. Every paycheck, every price increase, every career choice. Economics is already deciding for you, quietly. And the danger isn't ignorance. It's thinking economics is only for experts. Because once you understand incentives, scarcity, and trade-offs, the world stops looking random. It starts looking predictable. And that's uncomfortable. In the next video, we'll break down the most misunderstood economic terms: inflation, GDP, recession, interest rates, demand, supply, not definitions, but how they actually affect your life. Because once you understand the language, you start seeing the system.